Hello traders, good afternoon. Can you hear me well and can you see my screen, guys? Not quite sure about the screen here. 1 second. Oh, now the screen should be on. All right. So once again, good afternoon. Please give me some okay, some yes, some Y, some something. If you can hear me, you can see the screen, guys. And we begin. Perfect. Thank you very much. So, okay, here we are. All right, so the market is moving a bit, as we can see. Again, rumors, discussions, speculations over the trade war, USA, China, and so on. We can see the immediate impact on the markets, mainly with the yens, francs, and the commodities. The first to react instruments to any sensitivity from the market. So let's go over the opportunities we are following, update, upgrade, and see what's next to the follow. Keep in mind, and a reminder, this is Thursday. Okay, Thursday is always one day before Friday. Yeah, it makes sense, right? And it's weekend, so we do not go for longer term positions, new ones before. Normally, updating, upgrading, managing the ones we need and keep a follow-up. Short term could be, of course, used. So let's start. The dollar yen was the first one that we were following to go and make the trade. As discussed yesterday in the live room, we neither go for one more hike, one more rally, divergence, and a move down, or we are holding this divergence and breaking through the trend line. So we got the divergence, we got a hold, and then we got the breakout. This breakout turns to be massive. The sensitivity coming from the market generally contributing here. Dollar yen making its next push. Do we have any signs currently of a stop? Not really. Daily never had a divergence against. It was a bearish convergence, so our plan was and remains bearish, looking for sell continuation. Currently, target is open. We don't really have anything we can set for that in terms of longer term cycle. So when we don't have longer term cycle, we rely on the current expansions and the current trends developing. So the Fibonacci expansion show us two good probabilities. One of them is slightly below the 109, next to 108.50. If it will hit as divergence, that would be a good place for cash out. If not, the next zone is only around 107. So if there will be no changes, no dramatic changes in the fundamental area, dollar yen pressure remains bearish for us. And that's pretty much what we have going since the break of the trend line. Again, as always, once you get a good risk reward, remember, you do not let a winner turn to be a loser. That's the first main goal in the management, right? This turns to be a good winner, so make sure it doesn't surprise you with any random moves that could happen in the market. We saw them happening a few times in the past. The next one that we have been also involved with in the short term is the dollar versus the franc. Same story. We were expecting, let's go back to the daily chart. Daily chart shows us the idea of the double wave, and back to the trend line as long as this top holds. The 4-hour chart was the one that provides us the divergence, two waves, retrace and divergence. And since we got the trend line breakout, we got a retest yesterday, and as long as it doesn't go one straight leg above 61.8, we are good, right? As you always know, my concerns are always one straight leg of 61.8. Never cross that, and since then developing a beautiful momentum. This is the trendline breakout that we had, the bearish divergence. So far, so good. So what's next? Currently, no signs against. The long-term trend line is still far away. This short-term trend line might be broken and open the doors for something deeper and bigger. At that moment, the pressure was and remains bearish. We definitely need to pay attention for a possible slowdown with this divergence. We can't now, with any wish, but we can't now know will that or not turn to be a divergence. But that's why management is very important at that stage. And if it does turn divergence, remember, 4-hour chart has to fit in before we do any kind of cash out, trailing stop loss, reducing the exposure, moving to break even, and so on. So both the direct dollar exposures, dollar franc and dollar yen, work pretty much okay for us. The star of the week was the oil. That was the one we started to follow here. Monday, trendline breakout after the double top with the divergence. All the rest is history. Oil is one of the main movers and paying great risk reward. So what's next? Again, of course, little retraces are acceptable according to the cycle from the daily chart and the divergences. The 38.2 is very close. We might see some battle there in between 57 to 58. If that's broken, the next level to pay attention to is right below 55. Want to remind you, this is the deal triple double. What's next? We will see next, right? As for now, no need to go and predict. Currently, the pressure is bearish, and this turned to be a trade of the week so far. Hard to believe it will change as the week is about to end, right? So that's the main things we have going since then. Now, few updates on the list. EuroCAD, our plan is looking for sell the rallies. Now take a look what happens with this pair and what's our follow-up. We have the retrace, but it's happening in one straight leg, which means we definitely need to pay attention to the level of, as you already know, 61.8. We are pretty much far away from it as for now, but this area is critical. Why? Because this was a cycle. After triple cycle, we expect a corrective cycle. Corrective cycle could be a range or two waves. At that moment, it's not a range, and it's not two waves. It happens in one straight leg, meaning we do need to be careful here. So first of all, there are no sell signs at that moment, right? There is a potential hidden divergence developing, definitely. It must be approved by ticking down. 1 hour chart must approve a divergence, and as for now, we don't have it. That's why patience is required with the euro versus the Canadian. And if we cross the 61.8, put an X on this plan, we will need much clearer picture. If it holds the hidden divergence and makes some blockage here, some stop with a hidden divergence or a continuing divergence confirmed with the 1 hour chart, then it's grade 1 to look and build the sell positions. Okay, so eyes on the EuroCAD. Very interesting from my point of view, however, could be easily becoming irrelevant. And if it crosses straight 61.8, it's always a warning sign. Pound versus the Aussie remains bearish for us. Quick look at this one teaches us that we're pretty much holding still the bearish momentum, but we do need to pay attention to the trio. This is a massive area. A lot of stop losses are located there from the early buyers. The way we can see the candles right now building up and the divergence building up, that might be it for this round. From here, we could expect to see some reversal signs, false breakouts, higher highs, triple higher highs, higher lows on the lower time frame, and some pullbacks, which we will later want to go and sell, but this later would happen very likely in the next week or weeks. So what to pay attention to? This clearance zone, as we just saw. Keep in mind it's also getting, well, not really close to 161.8, but not too far from there. And with this divergence to tick, that might be the place that we will face the reversals from. Okay, that's for the pound Aussie. Now also, this is a bend-to-bend movement, so it's a classical place for a stoppage and a bounce. Have your eyes ready for this one. Next one, Euro franc. We were looking for possible reversals by making higher highs or at least trendline breakouts from this area, or a push to the bottom of the range. And here we are, next to the bottom of the range. So what's next? The divergence is there. So the best thing for us, of course, is the slowdown, divergence, higher highs. Or the favorite alternative reversal, triple higher highs, higher lows, and then buy retraces. Okay. Have a bigger view here. It's building up an ending cycle. Divergence is building up a bit more, and the bottom of the range should use us as a good reversal. This is, from my point of view, a very, very interesting opportunity to watch, as long as the bottom of the range will hold, of course. Aussie Kiwi is another one that we still are bullish, but remember yesterday, as we discussed, the divergence starts to show signs against us. This is a place of reducing the exposure. If you still did not, it's still good. No change on the view, still following only after the buys. Let's go back to the report. Aussie dollar, now this one, here we stand. So 20 candles right on the Bollingers, right? No reversal signs from the daily, no reversal signs from the 4-hour, meaning no higher highs or no false breakouts. However, this candle might have some weight in it. Why it's important? We have been talking about this setup. So we got a breakout, and after turtle move, very, very, very slow, we got a retrace back zone of the breakout. That's the zone of protection. Now look what happens here. We go gray, which means we lose the momentum, and the 4-hour chart shows the massive engulfing. You know my personal view in such situations. Cutting early is critical, and that's the signs where cutting early should be considered. All right, very, very important one. Euro Aussie, we are after sells. Let's take a look. What do we have from the Euro Aussie? Basically not much. We're still holding in the same area. No real signs, no real new signs came since. Pretty much that's what we face. In my view, personally, is still bearish. We do have the divergence at that point. We do have here the structure of lower highs, lower lows. We have this trend line broken. So all the signs are to the bearish side. And it's, however, it's still risky. Why? Because remember, it's only currently at that moment 4-hour chart cycle. We have nothing really confirming, approving, or sorry, bad drawing. Nothing approving, confirming from the daily. So that only is a short-term cycle. This is the convergence coming from the 4-hour chart only. So we might be still building up another fake high. That's a possible scenario. That's why it's aggressive. Only short term, without confirmations or lack of it from the higher time frame. Nothing with, nothing against from the higher time frame at that moment. So the approach would be accordingly, keeping a lower risk. However, the view still remains bearish. And that's the euros. Now, Euro Kiwi, we are after sells, as you know, next to the level of 100. We are very, very close to that. Right? Like 100 or so points. Divergence is there. Even 61.8 still has its own pressure, but the legs are pretty much equal. That's why the 100 has much more value here. So what do we need? Lower lows. Do we have it yet? No. Do we have lower highs, lower lows? No. So yes, we have divergence. Yes, we have the levels. Do we have a reason already to start an attack? No. Not 4-hour chart, not even the 1-hour chart. And it's important to remember that patience is critical. If we get the triple lower highs, lower lows, then we can start talking about two waves and sells. Keep that on the watch list very close, because that might trigger any day, today, tomorrow, or next week. Of course, the ideal scenario would be a real fake breakout here with the divergence closer to 100. And if it will complete it, then we will consider that as another false breakout, and then a trend line might come in play if we will hold the 100 level. So again, too many ifs for this pair at that moment. That's why there is no action at that time. Definitely a serious watch. Next one, New Zealandian Canadian, bouncing and respecting the 100 level. Finally, some respect from this pair. Right? Good supportive area, good psychological area. 87.50, 250 figure points. Divergence coming in play here. 4-hour might be the one that will go for a corrective cycle. Does that change any of the higher time frame expectations from the weekly? Of course not. But short-term rallies are acceptable before the trend continuation. How do we approach that? 4-hour does not have any false breakouts or anything like that. The only thing we do have here is the ride from the daily. Once again, this one. The bounce of the psychological area and a daily divergence. No false breakouts, no higher highs. So how do we approach that? We need to verify triple higher highs, higher lows. So that's what we want to see. If we manage to see that, this would be the place to start looking for pullbacks and possible short-term rallies. Again, daily divergence, so the 4 hour to be corrective and the 1 hour to structure the cycles within the 4 hour chart corrective. Make sense? Imagine it this way, guys. Something like that. And then go to the 1 hour chart, and that's pretty much what you would like to see. A cycle within this area, a corrective cycle within this area, and a continuation forward, right? So the 4 hour to be corrective to the daily divergence, 1 hour to structure each of the 4 hour chart legs. That's how it works. Okay? Remember that. Not get confused, because sometimes we get excited by the 1 hour chart, forgetting the bigger picture. Okay? And it's very, very important to remember all the steps on the way and not get too excited by small time frames. New Zealandian dollar, the idea is looking for sell rallies. We didn't have a rally yet, so nothing really changed. Now, for those of you who are for short-term trading, this triple cycle with the bullish divergence now and the 20 candles right could be the place to start looking for possible rallies. The ideal scenario here would be, and here we do have a false breakout, is make this high and then on the lower time frame trade it. Okay, so that's from New Zealandians, and that's all from the forex view. Now, I'm not going to cover that as a trade for today, but start to pay attention for the euro dollar. It looks like another false breakout with divergence, and the 4 hour chart might be the one that will create, and I say might because we have no clue how it ends, but this candle pattern is massive, right? So with the two false breaks in a row on the 4 hour chart, one on the bigger view from the daily, divergence from all around on the moving averages, this could be an amazing trade coming. So have your eyes, and by break of this high, the euro dollar is going to provide this opportunity. Now, the only reason I said not going to be involved here for the long term yet is due to the weekend and the preferences of retrace, of course. But have that on the list. We don't meet tomorrow, so I will not be able to update tomorrow. But if it breaks the highs, we are bullish. Euro pound is on the zone where we look for the sells, bend to bend, 50% clearance area. 4 hour chart had for us this beautiful engulfing before. No lower lows yet, and no lower highs, lower lows on lower time frame to provide a sell. So we go to the 1 hour chart and waiting for that, for false breakouts and lower lows, or the turnaround by making lower highs, lower lows, and then we can discuss about the sells. Until then, watch list, not more than that. Okay, Stefan? Okay, cool. Now, in this, not in this, sorry, cryptos, we have two, Ripple and Ethereum versus the Bitcoin. We have a slowdown here. Break above that should be a good sign for continuation. Keep your eyes on this one and the next one, Ethereum, Bitcoin. Same story, two waves are building up here. Divergence building up. Break above that. And we should be expecting continuation to the upside. Okay, so the two cryptos are also on the list for us. And let me make sure I didn't miss anything. Of course, the stocks. One new one. So the first of all, the old one, the Deutsche Bank, still dancing around the cycle levels. No change in the view of the long-term invest. Nothing really changed here. No positive news from Deutsche Bank yet, so that's why the stock is still struggling. And the new one that we add on the list, Louis Vuitton. So what do we have here? Triple cycle. Some kind of a massive movement. No divergence between the spots besides this extreme. That's from the weekly. The daily has, well, this kind of special cycle by itself. And we build a lower lows idea here. Now the 4-hour chart, this is the first leg very likely from the daily. It must be a cycle by itself on the 4-hour. And the 4-hour has this kind of structure for us. So Louis Vuitton idea is bearish, while and as long as this invalidation area holds. It starts slow. Thank you, Rupen. See you around, my friend. So on double wave expectations, we start slow with this cycle, or the special cycle. Really doesn't matter how you measure this one. Heading all the way down for the second leg, 38 to 50, and maybe, just maybe, it's a beginning of something much more significant for the long term. We don't know that yet, as the daily never provided trend change yet by making lower highs, lower lows, just one leg. So it's early to discuss about it. But Louis Vuitton is on the list for sale. Sorry for all those who love the Louis Vuitton things. My wife also loves that, so it's just a stock, right? For us, we want to trade it, and maybe we buy to our wives cheaper bags in the next year. Just joking. So that's pretty much it, guys. That's what we have. Of course, several important runs, mainly dollar yen, dollar franc, and the oil. Several next ones building up from the pairs we saw. So have your eyes there. The warning sign is on the euro CAD if it crosses above the 61.8. Kiwi CAD for the possible reversals as discussed. Same with the Kiwi dollar. And have your eyes ready. Where is that? The euro dollar. Okay, that's all for today, guys. Thank you very much for being here, and I wish you a wonderful day, evening, and happy weekend to come. I'll see you in the Telegram groups. Ciao for now.